Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Eric Tait. Thanks for being on the show, Eric.
Thanks for having me.
Eric's the founder and fund manager of Veronaville Asset Management. He has analyzed, purchased, repositioned, managed, and developed numerous income-producing investment projects, both domestically and internationally. Eric is also the president of Principal Physician Management Organization, a Medicare Advantage partnership with Universal American Corp that has generated over $25 million in revenue since 2009. All right, Eric, thank you so much again for being on the show. And would you give our listeners a little more background about, how you got into, or I guess where you're at, what you're doing, and how you got into the syndication business?
Okay, no problem. I'll kind of start with background. I'll try to keep it as succinct as possible. So as you heard, I'm a physician. So I actually went to medical school and business school at the same time. When I was in business school, I actually learned how to kind of evaluate stocks and bonds and businesses and those types of things. And what I realized is that I personally did not want my money on Wall Street. I didn't want to own a lot of publicly traded assets for long-term hold. I don't mind trading them kind of back and forth, but kind of a set it and forget it for my own portfolio I didn't want. So what I did while I was in business school and then finishing my residency after medical school, my wife and I just kind of looked around at how we wanted to ultimately invest our own money. So we looked at franchises, operating businesses, all of these different types of things. But what we quickly realized is that, medicine is we call it medicine is a jealous mistress, meaning a lot of your time goes to practicing. So those types of operating businesses were not something that I could do at the beginning of my career. So then just looked around and said, okay, where do the wealthiest people in the world put their money? And usually they start an operating business or it's in real estate. And so I figured out real estate is probably the best way to go. Started buying single family homes, small apartments when we got out of residency. Had some physician friends who wanted to invest alongside of us. Went to a securities attorney, asked them kind of, hey, what's the legality of this? What does that look like? And he basically was like, well, this is the paperwork you do. This is kind of how you set it up. This is what you let the Securities and Exchange Commission, the SEC know. This is what you let the states know. And, as long as you do your paperwork, you can bring as many investors in as you want if they're, accredited. And I don't know if we'll go into all of that, but, with some criteria. And that's really how Vernonville was started. Vernonville was started because it was our own investment firm. And Vernonville was our management company for our own investments. And then we just allow other people to now invest alongside us in the different projects that we do.
Wow. So tell us, what was the first project that you all worked on, that you all completed?
Oh, okay. So the first piece of real estate we owned that we generated income from was a condominium that I bought when I was in residency. And so the city that I'm in Houston, so I went to residency down in Galveston, which is about 45 minutes south. I bought the condo in my first year of medical school. I rented it out to another medical student when I was there. I put a home warranty on it. And so the warranty company I didn't have a team built at the time. I wasn't trained at that point in time, right? I didn't have a team in place. I didn't have any of those things. So I just, I was like, let's just buy a home warranty. And they came out and would fix stuff for the tenants without any problem. And so it was actually a pretty smooth process renting out that condominium. And that was kind of what we call accidental landlord. Our first, hey, let's go out and buy something for an investment purpose was a single family house in 2007. It was right at the tip, the beginning edge of the mortgage meltdown. Texas was about a year behind the rest of the country. So this was actually an early foreclosure. We bought it for probably, $45,000, renovated it. That's when I was introduced to a two-step loan program using a hard money loan and then going into a permanent loan. And we actually didn't have any money out of pocket to do that deal. And at that point in time, I started, spending money, joining real estate investment groups and spending money to learn how to actually do real estate investing effectively. And that was really the beginning of us purposefully putting money into real estate projects. So just a 3-bedroom, 2-bath, 1,200 square foot house in the suburbs of Houston, Texas.
So what's your all's focus right now? What type of asset class, what type of properties are you all focused on right now?
So it's interesting, right? So we've got a few projects. We're wrapping up a large commercial power center, which is about 136,000 square foot retail center. It's got a Burger King, a Discount Tire. Right now, we're in negotiations with a multifamily team to help them B-class repositioning in the Houston market. We are very much product agnostic. And what do I mean by that? We want hard assets that generate income streams in great markets with great teams that have great macroeconomic factors. And why do I say that? We have a very specific investment philosophy. It starts with kind of the market, because the market you can't control. I don't care how great of an operator you are. If you're in a bad market, you're in a bad market. A great operating team can mitigate a bad market, but if you can be in a good market, be in a good market. And when I say market, I don't just mean necessarily geographic. I also mean product type. Who is the avatar of the person that you are serving with your asset, right? Because all of these things, all we're doing in real estate is renting time and space, right? So the question is, who needs that time and space, and what are they willing to pay you? And are you on the necessity side, or are you on the want side of things, right? And so that's kind of how we look at real estate. We don't really, the last thing we care about is the actual asset. So we start with the market, then we go with the team. Can we partner with a team that has the operational capacity to solve the problem that the market has, so that the asset itself is the solution to the problem? And so we will look at anything, almost anywhere, as long as I can get a handle around the due diligence. And I feel that over the next 5 to 10 years, if we have to ride out a few bad economic cycles, that we can do that, meaning we're buying it at an entry point. We can ride out some downturns if we need to.
Awesome. So, with what you just said, tell us, I get this question often from investors, and I'm sure you get it too, with, quote, the market, end quote, the way it is and all these things, So, what are specific things you're looking for, when you're looking at another team to partner with, to bring capital to, that type, what are you looking for to say, okay, this is the team, some specific things, and this is maybe the market or the property, can you go in a little more detail there?
Absolutely. I love to go in the weeds. I try not to do it unless someone asks me. So first things first is market. So from a philosophical standpoint, I like workforce housing. So I like the low end. I like the high end. I don't want to be in the squishy middle. So I don't want to be JCPenney. I don't want to be Sears. Please don't sue me. I don't want to be I do not want to be a middle market person, a person who is going after the middle class United States. If you understand macroeconomics, you understand the way that our monetary system works, that there's a hollowing out of people who only make their money from labor sources. It's a fancy way of saying that if all you do is work for wages, every year you get poorer. So I want to be on the lower end, where people are either falling. In a bad economy, the middle class is falling to it. In a good economy, the poor are moving up to it. Okay. So right now we have a good economy. So the poor are moving up and have a little bit more aspiration in terms of things that they're buying. Or I want to be on the high end, right? So rich people don't care about recessions. They're going to spend on their wants, their luxuries, their vacations, and those kinds of things. So I don't want to be in the middle. So we start there. And so then we say, okay, what does that look like in different asset classes and different product types, right? So personally, we don't necessarily look at A-class apartments, right? That is really the middle, not the super high end. And you build too many of those, there's not enough income growth to support the level of rent that you have to pay for that to make sense, right? So we'll start there. Then when we talk about market, now we're talking about geographic location. So now we're saying, do we have the drivers that make sense? Do we have positive job growth or positive net migration? What people don't necessarily realize is the baby boomers are also migrating to the South and to the Sun Belt. So even though you don't necessarily need a place that has a job, they're bringing their incomes. They're bringing their 401k dollars. They're bringing their Social Security dollars into marketplaces, especially Central Florida, Southern Florida, Panhandle of Florida, all the way through Arizona, that even though there might not be quote unquote job growth, there still is income coming into the marketplace from other places. And so that's kind of a step down you may want to look at, so that there are places that are growing, even though the job growth may not be robust. the net migration in by people who have incomes from their investment portfolio may be bolstering it. Same thing ends up happening in markets that are vacation markets. There are huge vacation markets that are growing gangbusters right now because the baby boomers have disposable income and they're traveling in big groups. So we'll look at, hospitality projects that have 2 and 3 bedrooms. We'll look at, those kinds of things, right? So now that's kind of a big market overview. Moving on down to the team. What I want in a team is expertise and experience. And even if the individual person I'm talking to doesn't have experience, if the team they have around them does, this whole thing is a team sport, right? You don't yourself have to have all the knowledge, but you have to have the team around you. So perfect example, I got emailed today. Someone's doing residential assisted living here in Houston. We've met at a couple of conferences. Went on LinkedIn, realized we have some people in common. I know who his mentor is who trained him. I just texted him, hey, you know this guy? He's like, yep, he's a good guy. I've been to his places. He operates well. Go do your own due diligence. I literally texted another guy who actually saw in the airport this weekend. We were both going different places. Hey, you know this guy? Like, yeah, I know him. He's a great guy. I don't, do your due diligence, but I would hire him. So it's that connections. It's that understanding of how, knowing where people got trained, knowing who their Rolodex is, knowing who they're going to call upon to help them if they get in trouble. It's very much a relationship game. And then lastly, again, like I said, the asset is the least important thing, right? In the end, you can always fix something or build something. The question is, can you do it at a price that makes sense for the top line revenue you're going to ultimately bring in? And so that's kind of how I go through things, and I go through them just kind of like that quickly. But this has been many years of me doing this, right? So I can kind of do that very quickly and get a clear understanding like, okay, this makes sense peripherally. Now let's really do a deep dive. But then it's also easy for me to say no to things like if you're telling me a project that just doesn't fit my wheelhouse, I'm just going to say, no, that's not something I really want to do. And so we're big on personal investment philosophy for ourselves and then personal investment philosophy for our investors as well.
Awesome. I really appreciate you breaking all that down. I haven't heard anyone talk about, all the retirement money that's going to some of these marketplaces, so you may not see the job growth. However, there's still population growth.
Yep. My mother's a perfect example. My mother moved from New York into the Houston market. She will not be counted as a job, but she's got disposable income. So she goes to the theater, she eats out. All of these things that she does will never show up in a job growth number, but it's still income and positive net migration into the marketplace.
So, talking to the listener who maybe hasn't raised for a deal yet, they haven't syndicated a deal yet, but they're trying to get into the business. But I feel like you have a large expertise in raising capital and talking to investors. Help us, help that listener really have those conversations. And how to build that relationship, but also how to speak. Educate. Be educated about how to talk to that investor.
No.
Maybe about their first deal and what they're looking at.
Absolutely. When I mentor people, I talk to them because people helped me as I was coming up. The first thing I tell people is do something where you make money. Don't try to raise capital until if you're going to be the general partner, the operating general partner, do not raise any capital from other people until you've done a deal yourself that you can replicate multiple times. Like I can do multifamily pretty well in my sleep at this point. I can do, rental houses in my sleep at this point, right? Understanding the metrics and understanding those types of things, because I have the seat knowledge of knowing where kind of the bodies are buried when things happen. And even then we have projects that, we under budget just because we just didn't realize what was behind the walls. Stuff still comes up, right? But you have to have a knowledge base that you can pull from, or you better have a bunch of extra cash somewhere to be able to work your way through the things that aren't necessarily kind of in the textbook, as they like to say. Everybody will tell you something is great, but until you lived it and said, okay, I know that this building is 60 years old. I know that probably all the sewer lines are galvanized, and I pretty much know that they're probably all collapsed. So I'm going to need to take those things out very likely, or have a plan in place to fix that at some point, but you would never see it, right? It's just little things like that so that you get some seat knowledge because you don't want to be practicing on other people's money. Now, that doesn't say that all deals go well, even with people who have tons of experience. There are projects that are going to go badly. There are projects that are going to fail. It's going to happen. but you want to lessen your chance of that happening with other people's money by at least getting some experience first if you're going to be the operating partner. And if you're not going to be the operating partner, put some of your own money into an operating partner's deal that you might want to partner with in the future to get a sense of how they go through and work through things. Now, on the investor side, so let's just say you have been successful out there in doing something in the real estate realm. Now, I will tell you it is a lot easier to try to attract investors to you than you try to go out and find investors. And so what do I mean by that? I am big on harmonization between what you want to do with your investing life and your investing business, because that's what you're doing. You're creating a business, and bringing people with you that have the same philosophical understanding of what they want their money to do for them. You don't want to put people into your project who have a different set of expectations than what you do for what this project is going to be. So I am a firm believer that I don't convince anybody of anything. I do not convince people to invest in anything. What I do is try to figure out what they're trying to accomplish. And if it coincides with what we're doing, then we have a potential basis to do business, assuming we can get along, assuming we, want to be in a long-term relationship, because this is very much like a marriage. You need to like your investors, and your investors need to at least tolerate you, right? And you don't want to put people in who are going to be a pain in your behind. One, because it's your business. You're creating your own investment business. You're creating your own, you're going to spend a lot of time doing this. So there's no point in creating something that you don't want to be doing or something that stresses you out. You'll be stressed out enough by the projects you're managing and dealing with. You don't want to deal with bad personalities on the back. Well, let me not say bad. It's a value judgment. Personalities who do not coincide with your personality on your investor side as well. And so the biggest thing is, who has a need for the thing that you want to do, and figure out a way to attract those people who can qualify to be in your project on a go-forward basis. It makes life a lot easier.
I'm going to ask you about, tell us about how you attract those people. How do you attract those investors instead of you trying to go out and getting them like you're talking about? I've lived that myself, and I've seen other people, you know what I mean?
Yeah.
And so, give us some tips on, attracting those investors that want our products, our deals, that type of thing.
Absolutely. So now we're getting into heavy marketing and sales, right? And many people have a bad connotation around that because it feels like it's intrusive towards other people, but it's really not. See, I'm unique in that I am my own best customer. I am doing the things that I want my money to do. It just so happens that I'm in a profession with people who have disposable income. But even beyond that, I'm in a profession that is rapidly changing as it relates to how my colleagues and physicians are paid. And because of that, many people don't realize that medicine is let me not say few, but it's a profession that as you get older, you actually have to work harder to make the same amount of money. Usually in other professions, the older you get, the more experience you have, the less you have to work, the more that you make. Okay. Medicine is different because every year someone else decides what we get paid for the most part. Either it's the government or it's insurance companies. And since no more money is being put in, because I'm sure many of you are paying very high premiums for your insurance, that money doesn't come to the physicians, most of it. And so every year we tend to make less and less, even though we're getting older. We're having kids are going to college, you're trying to fund retirement, all these things. And you're having to work harder the older you get. There's really no way out of that, and physicians cannot control that. So to supplement your income, either you're going to have to get a second job. We already talked about the fact that we're pretty busy. Or you're going to have to figure out a way to make your portfolio create income for you. Well, it just so happens that that's what I do. That's the stuff we like to be in. So my colleagues are a natural avatar who understand that, but most of my colleagues will never, ever invest with me. And that's okay, because it's always going to be a very small percentage of people who do the different things than everybody else, right? There's a reason why there's a 1%, there's a reason why there's a 99%, and that's in every field. You cannot do what everybody else does and not expect to get the results that everybody else gets. Now, the good thing about my colleagues is if they work for 30 years and put the maximum amount away, they will probably be okay unless inflation goes crazy. So they don't have a gun to their head like, oh my God, I'm going to have a bad life. But they will continuously work harder and harder and harder and harder every year. And most don't want to. And many of you don't realize the frustration level that many physicians have. Many are getting out of the profession. This is one of the reasons why. And so for those who want to do something different, I kind of hold myself as kind of a moth to a flame, but I'm not for everybody. And what we do is not for everybody. And as someone who will raise capital, you will not be for everyone, and that's okay. You just want to be the best you that you can be for the people who are predisposed to working with you. So you have to identify someone's problem that you will solve with your business.
I like that. Identify someone's problem that you will solve with your business. So help us as far as the investor relations aspect. So now we have the investors, how do we just really build that relationship, for the long term?
Now we're getting into good strategy. So we'll build it from the ground up. So for me, the biggest thing that I did was take sales training. So even though I went to business school, I'm sure everybody would realize that there's no sales training in medical school. Well, there really isn't any in business school either. So I did sales training, which teaches you to look for people's problems first. Once you know people's problems, then you need to become an expert in that problem, in solving that problem, which means that you are going to need to do a lot of reading, a lot of understanding, and then a lot of understanding of what people are also invested in, because they're not going to just give you all of their money. They're going to be invested across multiple platforms. So you have to understand what the pros and cons of everything that they're investing in potentially. And most of it's just stocks and bonds and mutual funds, index funds for the most part. You have to understand the pros and cons of that. Now, you don't necessarily need to denigrate what they're doing, but you have to juxtapose what it is you're offering and why it could be either better, the same, is a risk mitigation tool, is a diversification tool. You've got to figure out why they would do something differently, right? So that's number one. Number two, you have to get out there somehow. So whether it's writing on Bigger Pockets, whether it's creating your own website or your blog or what have you, people have to know you exist. People have to know that what you do can help them. Okay. And so and then I would say positioning yourself in such a way that you are, if not an expert, at least experienced. Right. And so if you're experienced, people can say, okay, well, let's attach myself to your experience so that we can go forward and do this kind of thing together. Then you need a way to be able to communicate with them, meaning you have to have some kind of way, a list that you're then sending them some kind of information, that you're touching them, that you're letting them know that you still exist. That's what's called a CRM, or customer relationship management system, or software. There are a bunch of them out on the market. There's a bunch of them out in the market. And, people want to contact me, I can let you know kind of what I use and all of that kind of stuff. Don't want to necessarily give them a commercial, but I'll help people one-on-one with that if they want. And then you just have to give them good material. You don't want to always just be pushing your own projects. You want to help them. I'm big on education. So I'm trying to get people to be educated investors. What I want people to do is to invest themselves in their own money, to not abdicate that to somebody else or abdicate it to the quote unquote market to fix it for them. I want my investors to be educated so that when they're buying something, they understand exactly what they're buying, why they're buying it, and what price they're buying it at, and what price they would then sell it at in the future to book a gain, because they realize that now it's become expensive. All right. I don't need people to get a master's in finance, but there are basic valuation metrics that, if they're professional, if they become an accredited investor, chances are they can do some basic math. And you're just really teaching them what are the basic inputs of whatever it is that you're doing, so they can understand exactly what they own, what the valuation is, and what the ultimate plan is. And so that's really kind of how we do investor relations, right? Touch them, teach them, and just kind of be around, right? I'm pretty ubiquitous on social media. I'm around. I have my own podcast. I mean, you can touch me, right? I'm pretty real. People who know me will tell you, yeah, he's that guy. And so there's a certain amount of putting yourself out there that you're going to have to do. You don't have to open the kimono completely, but there's a certain realness you're going to have and a certain vulnerability you need to be willing to have, because people are literally giving you a piece of their soul when they write you a check. They have literally exchanged their life essence in labor for something that they're now giving to you. So you gotta kind of revere that and be willing to be open with people who are doing that for you.
You said so many great things there. And one thing I was taking notes, I really like that you must touch them, you must teach them, you got to be around, that's some great points. And before we have to wrap up, Eric, what's the number one thing that causes syndicators to fail in this business?
Fail raising capital or fail project wise?
Yeah. Why don't you just focus on the raising capital? What's the number one thing that you see people?
They don't know how to sell.
Don't know how
no
to
question. I failed. So here's what happens, right? So that first group of colleagues that came in and wanted to invest with us, they knew me, ready to go, no problem. Let's go. I was like, okay, well, I'm building this infrastructure now to bring in these people. We've done it. We spent the money. We've got it. Okay, let's go out and do it again. And so I went out leading with my projects and my deals and what we're going to do and all this kind of stuff. Fell flat on my face, completely flat on my face. And I had to either decide to give up, which is what most people do. So failure is giving up, right? Because if failure is course correction, you haven't failed, you're just correcting course. But once you've given up, you have failed. And so most people give up because it's hard. It is hard to ask people to give you high 5 and low 6 and low 7-figure checks. It just is. There's just no two ways around that. And so the biggest thing is understanding that your project, your deal is not about you. It's about what service you are bringing to your investor. And what a good sales training course will teach you is that it's never, ever, 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 ever about you. People think they start businesses, start these things to benefit themselves. They really don't. Unless you're really dealing with the outside world. You cease to really own your business because the market is going to tell you what it wants, right? And so what you try to do is create a business that coincides with what you want and the market is willing to pay for as well. And so the biggest failure I see is just people just give up because it's just hard. Raising capital is hard if you don't know how to sell. If you know how to sell, it's still hard, but it's infinitely easier. It is infinitely easier because then you stop pushing at people and you start cultivating people and you start teaching them and you start giving them what they need and you start finding the people that are already predisposed to what you're doing. And that barrier, that wall that they may have up is going to fall because you are the answer to their problem. You just have to frame it in such a way that they realize that you are the answer to their problem.
I like it. And the last question, tell us the number one thing that's contributed to your success.
Sales training. Straight up. I'm not going to lie. I mean, straight up. Sales training and mentorship. I pay a lot of money for education, for mentorship programs. I believe in sitting at the knee of people who have done it before. I usually do not try to reinvent the wheel. And so I will spend 10% of my income a year on personal development, going to conferences, going to courses, going to seminars, joining mastermind groups, because ultimately, as stewards of other people's resources, we have to get better. The market changes. It is incumbent upon us to be on the forefront of what's happening. Do we get it right all the time? No. Are we going to get it right? No, because no one is perfect. But people will give you a lot of slack when they realize that, oh God, you are out there fighting for us. You are out there learning. You are out there doing. Not everything's going to happen great, but we understand that you are out there on the front lines, learning for us, bringing us new ideas, bringing us new information. So you're not just staying stagnant over here and just bringing in money and just letting it do whatever. You're actually out there learning and becoming a more skilled person. That, I think, is because I'm relatively curious. That has been the biggest thing. And so dropping my ego to understand that I was doing something wrong, because clearly people had already given me money. So clearly I was doing something wrong if other people were not as well. So I had to figure out what I was doing wrong and learn the skill set, because it's not like people don't do this every day. And so it can't be out there. It has to be internal. And so figuring that out was kind of the biggest leap, and understanding that any obstacle you have, you just have to become better to overcome it.
Tell the listeners how they can learn more about you, Eric, or maybe get in touch with you.
Okay, perfect. Like a commercial. So my name is Eric Tait, EricTait. The investing website is Vernonville, VERNONVILLE.com, Vernonville.com. Office numbers 877-668-3311. And email is just Eric@Vernonville, VERNONVILLE.com. And Eric is ERIC.
And you also have a podcast.
I do. So the podcast is actually focused on healthcare professionals. So doctors, dentists, chiropractors, kind of the people in my wheelhouse, my colleagues. And it's called The Physician's Road. You can go to thephysiciansroad.com. And so we have a ton of resources up there. So we've got a ton of like real estate educational webinars, reading lists, podcasts. And the podcasts just aren't about necessarily medicine. We talk about relationships and health. Now there's a little bit of a healthcare bend, but in the end, busy professionals are busy professionals. And so kind of 5 things we talk about are wealth. So a lot of it is investing, but we don't talk about our investment projects on that. Professional practice, that tends to be kind of medicine focused, but health, that's mind, body, and spirit. Relationships, again, that's not professionally specific. And then personal development. And that's all about kind of your relationship with yourself and how do you get better. So I have, guys like the real estate guys on the podcast teaching you how to do sales and those kinds of things. Public speaking, just things that can help people increase whatever skill set they're trying to have within themselves.
Eric, you've been a great guest. I really appreciate your time and just everything you've given to the listeners and to myself. And, appreciate the listeners being on today. And we hope you have learned a lot and you'll connect with Eric. Please join us on the Facebook group so you can interact with guests like Eric, and we can all learn this business better together. And we will talk to each of you tomorrow.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.